Now the topic before us is current account in balance of payments. We have already learnt that there are three components of balance of payments. First is current account, then capital account and financial account. So current account is one of the components of balance of payments. Every country has to make exports or imports with the rest of the country. Suppose this is our country and this is the rest of the world. So we have to export goods. We export goods which we have in abundance. We also import goods from the rest of the country, rest of the world. In the same way, we also provide services to the rest of the world. That is export of services. In the same way, a country may also receive services from the rest of the world. That is import of services. Sometimes we get humanitarian aid from other rest of the world. For example, there may be some severe earthquake when we receive foreign aid, or there may be some sort of grants, or the individuals of residents of the country may receive gifts from their relatives abroad. So a country may receive unilateral transfers. When we are receiving unilateral transfers, that is the one-time transfers from the rest of the world, there are also times when we send aid to the rest of the world, or the gifts are sent by individual residents of our country to the rest of the world. So unilateral transfers are paid. These are unilateral transfers which have been received. Sometimes we receive income for our investments made abroad in the form of rent, interest, or dividend or profits. That is, we receive income from investments abroad. Sometimes there are occasions that usually there are some investors have made investments in our country. So the payment has to be made to them. So income paid for investments held domestically by the investors of abroad. So we have to make payments for investments, income in the shape of profit, dividend, or incentives, which is paid abroad. So you can find that all these transactions, whether these are export and import of goods and services, or unilateral transfers, or income for investment either received or paid, come within the purview of current account. This is the current account. If I straightforwardly define what is current account, you may or may not understand the same. So I hope you have understood what is the current account. Current account is the account in which we make record of transactions pertaining to export and import of goods and services in respect of unilateral transfers paid or received, or income from investments paid or payments made abroad in respect of the investments held by the foreign investors in our country. So it is one current account is one of the primary components of balance of payments. As already told, other components are capital account and financial account. There is, in case of balance of payments, there is also one additional element which is known as error and omission. Current account records all the transactions related to export and import of goods and services, income earned from foreign investments, and payments made to foreign investors, and unilateral transfers sent abroad and received from abroad. I hope the definition of current account is now clear to you. So all these transactions which take place between a country or the residents of a country and the rest of the world during a given period, which is usually 1 year. A country's current account balance can be influenced by a variety of factors such as its economic growth, trade policies, exchange rate, international competitiveness. It means that whether the country is importing much or exporting much, or whether it is receiving less income and giving out more income, it all depends on the trade policies, exchange rate, international competitiveness, and economic growth. Now, this is the current account. In balance of payments, a brief overview of the same. Here, in case of balance of payments, the entries have to be recorded in the form of debit and credit items. Here, outflow means outflow of foreign exchange. All the transactions due to which there is outflow of foreign exchange are recorded on the debit side, and all the transactions on account of which there is inflow of foreign exchange are recorded on the credit side. You will see that if we export goods and services, there is inflow of foreign exchange. If we import goods and services, we have to make payment abroad, so there is outflow of foreign exchange. When we receive unilateral transfers from abroad, there is inflow of foreign exchange, so it is recorded on the credit side. When we make unilateral payments, transfers abroad, when we send payments abroad in the form of one time transfers, then there is outflow of foreign exchange. When we receive income for the investments held abroad in the form of dividend, rent, profits, then it is recorded on the credit side because it is inflow of foreign exchange. When the payment is made abroad to foreign investors for their investments held domestically in the form of dividend, rent, interest, then these are recorded on the debit side. This is the broad overview of the current account. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.